Good afternoon, this is Sean Golding with Golding & Golding, here to discuss the basics of what do you do when you get an international reporting penalty, how do you evaluate it, how do you analyze it, how do you fight it, can you challenge the IRS? Let's go through the basics, right? Your international penalties are what's called assessable penalties. They're not the result of there being any necessary tax liability. For example, right, you're a small business owner and your IRS thinks you didn't do your taxes right, so they audit you. You go to the audit, you deal with that headache, right? At the end of the day, they go, you owe this money possibly. And you go, okay. And so then they go, well, there's also a penalty because there was a significant amount of unreported income and they're not willing to bring it down. And you go, okay, fine, whatever. I don't want to deal with you guys and gals anymore. So you agree to the penalty. You knew about it. You realized what happened. You had the chance to dispute it. And at some point, you acquiesced or relented, right? These penalties are different. Oftentimes, there's no unreported income. In the most common situation, Michelle receives a gift from a foreign person. She doesn't know she has to file. She goes to her CPA. CPA files the Form 3520 late. Generally, if it's not filed with sufficient reasonable cause, even if it is, you could still get penalized. But let's assume that there was just not enough reasonable cause in the letter sufficient to convince the powers that be at the IRS. Michelle gets a penalty down the line for 25% value of the gift. The gift value was $1.2 million. She gets a $300,000 penalty. Okay, that is commonly what happens when you have things like 3520, 3528, and 5471. Now, the 8938 side note is that the 8938 is a penalty as a result of FATCA, the Foreign Account Tax Compliance Act. It's different than some of these other forms. It's only filed when your tax return is filed, et cetera, et cetera. But these days, hundreds of thousands of foreign financial institutions have entered into exchange of information FATCA agreements, intergovernmental agreements with the U.S. government. So it's not uncommon these days for taxpayers to get soft letters from the IRS saying, hey, you reported it this way and the bank is showing this way, or hey, your tax return doesn't show any assets, but the foreign financial institution is reporting that you own these assets, and so they give you some time to fix it without putting you under audit as of yet and before they penalize you. Typically, the penalty is going to come in by way of a CP15 notice. You generally have 2 weeks to pay it based on the value there, 30 days to respond if you want to protest it. You always pretty much protest it. I mean, there's no reason not to. It doesn't really impinge anything, right? You've got 30 days to tell the IRS why your failure to file is a result of reasonable cause, not willful neglect. Sometimes you'll start, well, let me take a step back. During that time, the penalty is being enforced, right? So you'll probably start getting 504 and 503 notices saying you got to do it. You can only put that on hold. These days, it's more difficult to get someone on the phone, and they're a little more against putting it on hold as easy as they did back in the day due to these automatic assessed penalties. But that's definitely an opportunity to put it on hold without really doing any formalized filing like a CAP, which we'll get to in a minute. So what will happen is you get this penalty notice, you do the protest. If the protest, sometimes it's not rejected. Sometimes what will happen is they want additional information, and at that point you can supplement the information. If it's rejected and then it's going straight to an appeal, well, then you have to consider what you want to do down the line. Do you want to limit it to the appellate decision, or the IRS Office of Appeals technically, or are you considering going to tax court down the line possibly? There's several pros and cons. Some tax practitioners just will shoot you into tax court or tell you just to wait. They want to charge you an arm and a leg in attorney's fees when oftentimes it can be resolved at the appellate level. Okay, so something to keep in mind, there are various different ways to go, and there are various pros and cons to each way. So it's important you speak with a certified specialist to make sure you understand where your risk tolerance falls within those different categories, okay? If you do the collection due process and it doesn't work, then you can go to tax court. You can still go to tax court sometimes with the appeal, but it's a lot harder to show the requirements that they require, right? So with this, if you wait for the collection due process hearing, you can still go to tax court, but you have to wait for that. That can take years to get. The whole time interest is accruing, and there's no guarantee. Okay. Otherwise, if you just want to litigate against the IRS, and there are plenty of clients who are like, you know what, screw it, let's just go after them from the get-go. I don't want to deal with this administrative headache. You pay it, you pay whatever's due, You claim reimbursement, they deny it, or you claim refund, they go, no dice. And then you go, okay, I'm just going to go ahead and sue you in federal court. Now, there's a caveat to that, which is that there's a rule, the floor rule, which basically says you have to pay the tax liability before you get the opportunity to bring it to court. Remember, none of these are tax liabilities, right? Not reporting a gift, not reporting a foreign corporation, not reporting a FATCA asset. These are not per se tax liabilities. There was a recent case, and I apologize, the name of it's escaping me right now, where the taxpayer said, hey, when you have an FBAR, which is a little different, it's a FinCEN form, but it's still enforced by the IRS, Title 31 instead of Title 26. But hey, if I can't take you to tax court, then I don't have to pay the full amount to take you to federal court. And you know what? The court agreed, and they go, okay, you don't have to prepay if you want to sue for FBAR. So for all these other penalties, there may be an argument there that you don't have to prepay because it's not technically a tax. Keep in mind, during this whole time, interest is accruing unless you prepaid it. Okay. If you have not been penalized yet, if you have not received one of these letters and you want to try to avoid it, you just learned, oh geez, I should have filed one of these forms, there's various amnesty programs you can submit to safely get into compliance if you're willful, or you just can't certify under penalty of perjury that you're non-willful, or you've read too much online, now you're convinced you're reckless when you do VDP, okay? It's for people who cannot certify under penalty of perjury that they're non-willful. Otherwise, if you're non-willful, there's various programs. There's streamlined domestic, there's streamlined foreign. They both fall under the moniker streamlined filing, compliance procedures, SFCP. There's also delinquency procedures and reasonable cause. We have lots of free information available on our main website, goldinglawyers.com. You can always reach out and try scheduling a reduced fee initial consultation if it's appropriate to something we handle. Again, my name is Sean Golding with Golding & Golding. Thank you for your time. Enjoy the rest of your day.